Muktar, thank you. Always a pleasure to have you on the show.
Thank you, Esther.
Well, it's been quite a ride so far for the market. It started out very strong this year. At one point, it was called the best performing bourse in the world. And we all remember then, still remember then what was fueling that particular rally. But it looks like it may have lost almost all momentum now. Help us understand, just briefly, what is going on at the moment, why we're seeing this persistent downtrend of the market. And of course, we'll take it from there.
Yeah, I think it has to do, like I said the last time I was here when we talked about the momentum. You remember I told you that most of the players are treasury-based players. They have not fixed income players that used to play the treasury-based space and fixed deposit and others. So they see a better return in the equity market. Then they came in there at a good entry price. And some of them are not there to stay for the long time, so they just make their profit. Remember that what they are used to in the treasury market was low risks and low in terms of low return in terms of value, like 10%, 12%. So some of them made that within the shortest possible time, and they've gone out of the market and looking for another good entry point.
So speculators, but the market has always had speculators coming into the market, driving things around and then leaving. We've always had that cycle.
But we've not had the kind of volume you have when you have those that play the treasury space that never played the space before coming in. I think that's the challenge. That's what really happened in this time. We have more treasury people coming into the market. We have more fixed income people coming into the market. And remember that they also there's a little bit restriction in terms of numbers of investment vehicles in Nigeria now. Remember, they cannot play the UMO market again. So they came in to the equity market. Seems to be the most bullish one that they can play at any time. So I think that was what was driving the market at that time.
I know whenever the market is in a time or a period like this, we always talk about that one catalyst that could come into the market and drive positive trading. We know that fundamentals are there. Investors still keeping an eye on strong fundamentals of some stocks. But at this point, what is the market, or what would investors be looking to? The fiscal authorities, monetary authorities, government policies that have been perhaps positive in recent times. What would it take to bring this market up now?
I think the market is going to look for a trigger, and it's going to come when the results start coming in, especially from the big companies, when the Nestle's, the MTN also during their close period, the banking sectors also, most of them were expecting the results, especially the tier 1 bank. It's only First Bank that we've gotten their results, which investors are reacting to it negatively because they saw the terms of profit was good, but provision made it come a little bit very low. So with that, you've seen the third quarter result, we've seen the final result of FCMB, which was a little bit positive. We sent that of Fidelity Bank, positive. You could see that the terms of losing in those stocks has come down. But the big players are actually, all market lookers are watching out for is when you have Zenith Bank, you have GTB, you have Access Bank, you have UBA. Those are the banks that the market is really watching. If one of those numbers comes in good, then it will have a positive effect on the banking sector.
But ahead of that, should we expect the usual positioning just in the event that the numbers are
if you watch
encouraging to invest?
Yes, if you look at last week, the volume went up when the price went down, so the volume went up. So you see that what I'm trying to say is that most of all the short-term players see interest, and most of the volume were actually in the banking stock, especially with Zenith Bank, which investors are already saying, look, if they pay what they paid last year, even if they just decide to pay what they paid last year of 2.50 naira, and you are buying at a good entry price of just 20 naira or thereabout, then you're already making above 10%. And at this time of investment climate, that is a good deal.
But that's been the story of many stocks that we've seen on the bourse since the beginning of the year. Investors taking a look at those stocks and how they've had a lot of value shaved off, obviously due to the broad bearishness that we saw, but of course presenting a good re-entry point. Many have gone into it. I'm just wondering how that's going to play out. Let's restrict ourselves to the first quarter of this year. We're already somewhat halfway through already. Do you see investors continuing, to stay with those stocks that they believe, would still have strong fundamentals and have a pathway to further profitability?
I think investors will be looking at policy directions. And when you look at that, investors will be looking at the banks. What CBN have said they want to do with the banks. And you remember that the first meeting they have this year, they've increased the cash reserve ratio. So most of those banking sectors, you see investors waiting to look at the first quarter result that come in. The consumer space, you realize that the increment in the financial bill has come in. It's playing a major role in this sector now. will the consumer be able to buy goods the way they want to buy goods before?
So discretionary income, that's going to be a big conversation.
So it's going to be a big conversation. So they will look at all those policies. Then you see, going forward, they'll begin to look at what can we begin to see after that numbers come out. Until then, it will always be those coming in and going out.
It's quite interesting because when I talk to some other market analysts, it continue to tell me that valuations are still very good. I mean, at least compared to our emerging market peers.
Yeah.
When you think about who is playing in these markets, usually would have the local domestic investors, institutional investors, and of course the foreign players who sometimes it's just hard to pin where they are. Sometimes it's just neither here nor there. Well, could you speak to that point? The foreign players, is there a good volume number of them in this market?
I think we don't have a number of them yet. I think those that have confidence in the market, they are still there. We've not had a good numbers of them unless the NSE comes up with a report before the first quarter. But as we are going by the last quarter, we saw that a lot of them have been withdrawn from the market, have been making a little bit of profit. So we've not had those numbers because they are still looking at they're looking at the oil price, they're still looking at the exchange rate. They're still looking at a little bit of volatility. The oil price.
Absolutely, there are a lot of headwinds definitely at this point. But would you say that investors are bullish on the economy? The government, fiscal authorities especially, have taken quite a number of policy decisions. The finance bill, the VAT, all obviously geared towards increasing government revenue, but still sort of giving back, if you will, to small businesses to drive the economy.
I think the investors are bullish in terms of government revenue. I don't think they are bullish in terms of what the market will begin to see. Then you could see when the results start coming out, the good thing about it is that the financial bill also took care of most investors' fear, like the reduction in dividends, the non-taxing of dividend payout for where what you retain will not be taxed again. I think those also will help most of these institutions going forward. Investors will look at that, so we said, okay, fine, we could have a bullish in those areas. But by and large, I think this financial bill didn't really address most of what investors really like. Let me look at the sector like the stock market. You pay 7.5 transaction fee. Remember that for about 5 years, we're not paying the value-added tax in our transaction. And even after it was, 10 years, even after it was reviewed, the stock brokers were still asking for government to extend it to attract more foreign investors. And that didn't work, or rather, we are paying 7.5. So if you look at that space, you say it's not going. But when you look at government space, you think it's going to bring more money to the government coffer. And unfortunately, 85% of the money is going to go to the state. And the unfortunate thing again, the state is going to use that 85% of the money not to develop infrastructure, but to be able to pay the new minimum wage. That is the challenge.
Okay, Muktar, we'll leave it there. Thank you for talking to us today. Pleasure having you on the show. Muktar Mohammed, analyst at Assar Investments.